very closely. Tushar Mahajan, Head Listed Futures and Options at Nomura Financial Advisory and Securities, joins us. Good morning, Tushar. Thank you very much for joining us. At this point in time, though it is still early in the series, how is the contract looking? Does it look like it can remain strong, or will the second half be weaker than the first half?
I think we've had a decent run into the series so far. In the last few days, maybe the first 5-7 days of the series, we've already seen the index move up about 5%. That's primarily been a short covering rally, though there's been some fresh longs positioned as well. Now, while people are positioning themselves for another further 200-point odd rally, which could be probably gradual through the course of the month, and you do see some kind of build up on the option side beginning to take place between 82, 83, 8400. My own sense though is that we'll probably see a phase of consolidation before we move up. So the upside at max for this rally could be 8400, but I doubt that it goes there in this series itself.
What about the downside, Tushar? Because we did manage to bounce back from that 7500 mark quite well that we hit in the month of September. For the October series, what could the downside be?
The first support is obviously on the 8,000 odd levels, but I don't think that this series, the remaining few days in this series, unless something catastrophic happens, we'll see a level below 7,800. Even the positions which have been built, for a lot of the lower downside through the month, they are gradually being lifted off. So my own sense is that 7,800 should be a strong floor for this series.
How have the FIIs positioned themselves so far, Tushar? We have seen a lot of money flowing into index futures.
If you look at the net positioning, if you look that up, corroborate that with the open interest data, and for the foreigners, even the Singapore data is kind of important because a lot of them do have positions there. I think what is happening is that the first leg of the move has largely been driven by short covering. So that's where you see a lot of the money flowing into index futures. We still haven't seen a situation where people are aggressively building their longs via futures yet. And that is a bit of a cause of concern because that clearly shows that, there is not enough conviction, in the move from here on. So the money flowing that you see is largely short covering triggered rally and not really the fresh longs coming in from the foreigner side.
Okay, it's very interesting to see that the sector that has performed the worst this year, which is metals, has been one of the smartest movers in this series so far. So Hindalco has already given you a 20% return. Is there conviction on the upside?
Again, one of the big reasons for the sector's underperformance was, the global commodity slump and, just the way global commodities were reacting. Now, post the all-important FOMC, which happened, earlier in September, and then, you had the RBI rate cut, which was kind of a bit of an unexpected move. The quantum of the rate cut. I think the metals move is largely driven by a bit of a bounce on the global markets, on the global commodity prices, as well as a bit of the move in the dollar index. But beyond that, to think that from here on you're going to see too much of a fresh positioning coming into metals, I don't think so. It was a heavily shorted sector. You saw a lot of these futures trading into discount for almost the last 3-4 months across the board, and the narrowing of that basis now clearly indicates that it's a short covering move and not really a fresh long here. So, and as a percentage in the index as well, metals is now constituting such a small percentage of the index that I don't think the move in metals can really cause too much of an impact on at an index level per se.
Okay. How is the bank Nifty shaping up, Tushar? It's been the laggard over the past 48 hours at least. In fact, it has rarely outperformed the Nifty in the past week since the contract began.
Yes, that's been a bit of a surprise though, because ideally one would expect that with the kind of rate cut that was announced, you would start seeing the banks performing. But clearly in the rush to, cut down the lending rates, there's probably worries around NIMs, and obviously, the asset quality issues don't seem to go away. Having said that, I think technically the bank Nifty has a fairly strong support around the 17,500 odd levels. and I would tend to think that that should kind of hold from here on. We're not too far away from that index, so I would tend to think that bank index is closing in on the on the lower end of its range right now. And if the index indeed has to move to 8400 from here on, that's the only space I think which could which could really outperform. My own trade at this point would be to go long bank Nifty versus the Nifty for an outperformance move now.
Okay, so go long on the bank Nifty. That's one trade that you've advised. What about on individual stocks, Tushar? What are the 2 or 3 stocks that you would be long on for this series?
So I think one stock which looks kind of interesting at this point in time, from a price point standpoint and stuff, is Tata Motors. That's been a big drag now for the last 2-3 months, and we are beginning to see that move up fairly substantially in the last 3-4 days. I think there probably could be some more legs to Tata Motors, and you probably might see the stock move up to about the 370 odd levels, primarily given the fact that it has seen a lot of heavy short side positioning. So Tata Motors is one stock which I would probably be closely looking out again from in this series from here on.
Okay. Anything in the mid-cap space that catches your eye? I mean, I think even Titan didn't do too badly this month. And then, of course, there would be the odd drug stocks. Anything in the mid-cap space that caught your eye?
Titan, not really, but I think on the mid-cap pharma space, that's a space which is looking a little tricky at this point in time. Across the board on the, every stock has its own dynamic, and, news flow kind of continues to drive each stock. But I think as a space, the mid-cap pharma space looks to be fairly well positioned right now on the long side. And any bit of a reversal there could see a sharp move down. A lot of these newer stocks on the pharma space, which got listed on futures, names like Ajanta Pharma and all, could probably see a bit of a move down on any reversal of trend.
All right, and finally, just one check on HCL Tech, because that's been the biggest loser in this month in this series so far. It's already lost 16%. Is there more to go, and how do you approach that one?
Sorry, I didn't get the name of the stock.
HCL Tech?
That's been a very tough one to trade. You did see the big profit guidance that they gave. And one would have thought that given the quantum of the guidance, the stock did what it had to do on the first day itself. But it's a fairly well-owned stock, and when profit guidance or anything negative happens in these stocks, there's a rush to kind of dump the stock, and that's probably what we are seeing. We fundamentally like the company. We still maintain a buy, and it's a favorite pick in the IT space. But from a sheer positioning perspective, there could be probably another 4 to 5% to go on the stock before it begins to revert back.
What's the advice to people who are still holding long positions in Motherson Sumi or Bharat Forge?
Again, this entire space, leave aside Motherson Sumi with the Volkswagen scandal, so to say, but I think the entire space had heated up a lot. We are beginning to see a slowdown in global sales across the world. So a lot of these, and the India numbers haven't been too encouraging as well. So a lot of these OEM manufacturers are going to continue to face the brunt. So people, unless it's a 3-4 year story which one is looking to get through via Motherson Sumi or Bharat Forge or any of these stocks, from a short-term trading perspective, I don't see any reason for a big trading bounce back on these names.
Okay. All right. Can I ask for one long and one short trade on banks, if there is one? Any specific bank?
On the banking side, we've been running this for a long time, and basket of private sector banks on the long side versus the mid-cap public sector banks, and that positioning kind of continues.
All right, Tushar, we leave it at that. Thanks for joining us. That's Nomura's advice. 7,800 to 8,400 is the floor and the ceiling for the market that he sees in the October series. But on to a big